very warm welcome. You're watching the weekly edition of Your Trades on ET Now, a show where we track all the key developments for the week, earnings jam, and let's set you up for the next week. This is Priyanka Uppal, along with me, Snehi Shah. Snehi, we started the week with a very good start. In fact, bulls were in charge of the week when they started, but then later end of the day, in fact, today, the way VIX spiked, I think the game's paid off.
Well, you could say that, but also the trading session that we did see coming in on Friday, Sensex lost 1,000 points intraday coming in on Friday. And well, when the global handover was looking good, GIFT Nifty had implied a gap up start of more than 140 points coming in fact, more than 200 points coming in this morning. Well, we've seen an entire reversal of the trading session coming today. It's not something we had expected.
But we started with a lot of good news. Good news coming in from macro front. We know that Fed kept the rates unchanged for 6th consecutive time. In fact, dovish stance. Fed could make a dovish stance, which actually got cheered by markets globally. Worldwide, we saw US markets, Asian markets, and Indian markets also positively reacting on it. FI started buying this week. Barely it was for 2 days. Quantum was small, but then at least we saw FIs were buyers this week. Crude plunged to 7 weeks low, which was again a good news for Indian markets. And of course, the kind of profit booking we saw today, it is a red screen all over. But then PSU bags, metal, and pharma stocks did hold on to ground today also. Let's talk about what actually happened today. Today we saw a lot of news which was gathered by VIX. India VIX, there was a sharp surge in VIX, spiked nearly 12%, and that's where we saw some kind of fear of volatility kicking in. If you remember last week when we saw the VIX cracking off nearly 20%, that was a time when we saw an extreme volatile move on the upside. This is an extreme volatile move on the downside today. But then are we in for a consolidation next week also, or there's a chances of pullback? We will get you more on that when our technical guest also joins in. But what were the key stories that made headlines today? Of course, the macro front, we saw Fed leaving rates unchanged. We saw yen strengthening in the Japanese market that of course had fallen to 34 years of low. In Indian market, we did saw a lot of news, especially the conglomerates like Godrej.
Well, absolutely, Godrej, that family split coming in over there, and what they termed to be an amicable family split was taken well by all of the stocks in the Godrej basket except for one, which was Godrej Properties. And on Thursday, Godrej Properties had plummeted almost 4% because the entire land parcel in Vikhroli has now gone to Godrej and Boyce, and it does not. And Godrej Properties, that was a joint development partner in a 70-30 revenue sharing scheme, has now only gone down to a development manager with a 10% to 90% revenue sharing scheme. So that is what ailed the stock in Thursday's session. But on the flip side, a good recovery made by the stock in Friday's trading session on the back of stellar numbers and a brilliant growth guidance given by the company. 27,000 crores in pre-sales is what the company has guided for FY25 as well. And we'll be interacting with the management on Monday too. But in other news, then Nifty has touched record high this week. Mid cap, a record high coming in over there. Small caps also record high. Bunch of sectoral indices have touched record high, be it auto, PSU bank. Nifty bank also touched its record high. On the flip side, Nifty IT was the one that dragged this entire week based on some somber results that we did see coming, especially Coforge was a stock that weighed on the entire Nifty 50 pack as well. But in other news, then, when we talk about Nifty Bank, Priyanka, Kotak Bank was a newsmaker because of KVS Manian stepping down, and on the flip side, there was some buzz that he might be joining Federal Bank. So Federal Bank was up on the day where Kotak Bank was down.
Absolutely, but did you see that it was there's time and again a lot of news coming in for Kotak Bank only. Last week we had a news when RBI had put in some restriction that day, stocks slide around 6%, and then again this week. Now we have Kotak Mahindra Bank results on the weekend. Let's see how the bank posts the numbers, and of course a lot of key earnings coming in next week also. But then Bajaj Finance, what a day for Bajaj Finance, where we know that RBI lifted restrictions, started the day with good gains of 6%, but later it got cooled off. Bajaj Finance, a lot more to see from FMCG companies, especially the kind of results Dabur posted and the comments which came in from the con call that a strong quarter raises a hope for rural recovery. Now Britannia numbers are next week. Let's see, is that just a trend which Dabur is observing, or is it a trend which other FMCG companies are also observing? Auto numbers also did come this week, and we saw strong demand again seen for the two-wheelers. PV growth moderated a little here. But the next week is going to be again a lot of nifty earnings, Snehi. We have SBI, L&T, Tata Motors and Dr. Reddy's.
Well, yes, Hero Moto and L&T as
Hero
well.
Motor
So
also,
Hero
yes.
Moto. So you name the sector that's going to be in focus. On the back
Yes.
of L&T, you'll have
A lot of
IT.
mid cap and small cap stocks, of
Lots
course.
of names, lots of earnings coming our way as well. But viewers, let's kick-start the discussion now, and let's bring on board our technical experts and the guests for our show today. Rajesh Palvia, Head of Technical and Derivative Research at Axis Securities, and also we are being joined by Vineet Bulanchkar, Head of Research at Venturia Securities. Gentlemen, thanks so much for taking the time out and speaking to us today. Let's start with you, Rajesh. Let me come to you first and help us understand the kind of moves we've seen over the course of this week that went by in the markets. And at some point when the global handover was weak, we've done pretty well. Friday morning, when the global handover was rather strong and the implied open was indicating a gap up start, that fizzled off today. Sensex down almost 1,000 points on Friday as well. So help us understand that in a market like this where VIX is spiking, what sense do you make of a market like this? How should one play the market or navigate the market right now?
So, looking at the market structure, yes, there was a volatility in market, but if you analyze the structure for market, it's still in the bullish trajectory. Though we are witnessing that Nifty is moving in upsloping channel, that clearly shows on a weekly chart. That clearly shows that sustained uptrend is there in the market. There is a spike in VIX, but still, if you analyze the data, still it's in comfort zone. VIX is now trading near to 14 or 15 zone. So, but again, it's again, if it's remain below to 16 kind of level, then there is no as such worry in terms of spiking in the VIX. Yes, there would be volatility in the market, but again, the broader market is clearly showing the strength as most of the sectors are still showing the buying interest the way most of the stocks have shown the strength in the current week also that is giving us confidence that going forward also we can see a bullishness to remain continue for the market. For Nifty, the important support area based on the put concentration is placed at around 22,200, 22,300. These until these levels are not breaks below, the trend is likely to remain on the bullish side. Buy on dip should be your strategy until the 22,200 is intact on the downside. On the higher side, once again, Nifty manages to cross about 22,600 zone, then these really can extend further. Though we have registered all-time high trajectory also in this week. So this is a normal behavior whenever you reach to the all-time high trajectory, some profit taking always happens in the market. The same behavior we have seen in the market today itself. So I think there is no worry in terms of trend of market. Even for the bank Nifty also, trend is also on the bullish side. There is still outperformance if we compare with the Nifty. There is a still outperformance from the bank Nifty for this week. And looking at the overall structure, till bank Nifty is holding above 48,600. Buy on dip should be your strategy. And once we able to take out 49,400, 500 zone on the bank Nifty, then we can see further higher level for the bank Nifty towards 50,000, even 50,400 also. So both indices are still very well holding the ground on the short to medium term structure. So buy on dips one should adopt at this moment.
Means there is a chance of pullback, and in fact, you would buy the dip. That's what you're saying, Rajesh. All right, please stay with us. We have Vineet Bulanchkar also on the show joining in. Vineet, let's understand the different spaces wherever the earnings have made a mark. First, we want to understand the banks 800 rally, which started last week. That kicked off with a good set of numbers from ICICI Bank, and majorly the private side of the banks have registered good growth. Now it's the time for SBI to post numbers next week, and this weekend is Kotak Mahindra Bank. How should we approach the banks from here now?
I think it's still a positive trend as far as banks are concerned. I believe that SBI will be an outperformer over the next 1 year because it has been a laggard as far as the banking rally is concerned so far. It has just managed to catch up in the last 3 months in performance, and I think from here there could be a lot of outperformance from SBI, and I think that this stock could touch about $1,000 over the next 12 months. Kotak Bank, if you were to look at it, it is suffering from the pains of RBI strictures. And until that is sorted out, I don't think the stock is going anywhere. So, 1600 was a very, very strong support level that has given way. And, the stock can get into a vertical fall, I think, for another 200 points. So around 1350 to 1400 is where you should be looking to get into this stock, but it will be a kind of a slightly painful journey. You have to hold on to your stocks there.
We need to watch cautiously as far as Kotak Bank is concerned. Of course, this news, this can have an overhang on the news for some more time. That's what we need to say. Rajesh, my next question will be to you. So, there's been a famous saying that in May, sell in May and go away. Is that what could play in further days also? Because there's one part of the argument is that maybe there can be volatile moves throughout the May month. But since you said there can be a pullback also anticipated for coming week, but then how should one approach the entire May series?
I think if we analyze with the derivative data, there is no as such, a worry sign in terms of derivative data. Most of the sectors are still holding the ground, and the way rollover happened for the May series, that clearly shows that, for May series, we are going to have a higher close compared to the previous month, and we are projecting target towards 23,200 for May series. So on the downside, 22,100 is the key level for the May series. So till these levels are intact, trend is likely to remain on the bullish side. The sectors where we are focusing at this moment for May series, that is automobile, banking and finance, then power space is also looking promising, metal space is also looking promising. So these all sectors are clearly showing good strength, and the long built up is clearly there in all this sector. So we expect that these all sector can deliver good rally in this May month also. So I think one should use this volatility to buy and accumulate good quality stocks in this decline. And again, we are optimistic that again we could again resume uptrend, and possible target for May series could be towards 23,000 to 23,200 also.
All right, Rajesh, thanks so much for that view. Vineet, I'm going to come to you, and we spoke about banking earlier, but another sector that I want to get your outlook on is IT, because we've seen numbers coming from a lot of IT companies, and we've seen some muted FY25 guidance coming from the likes of HCL Tech, Infosys and Wipro. On the other side, mid-cap IT names like Coforge also have not done very well when it comes to earnings, but on the flip side, TCS and Infosys did pretty well for themselves. So would you say that the preference now to play this entire IT pack will now shift from mid cap to large cap? Is that how you would prefer to navigate the entire IT space?
So I am staying away from the IT space. This is the fifth quarter in succession that we are clearly staying away, and you've not lost anything, because your money worked itself to give you fantastic return from the domestic place. And the situation gets even more murkier now, because the IT band, the artificial intelligence is gathering steam. And what happens is it is replacing close to 7 jobs for one in the US. And there are retentions happening in the US and jobs being shifted to Mexico, India, and other markets. And what is happening out here is that, so while the connection, the contribution from AI may increase, but the other sectors, the traditional sectors, are going to be squeezed in terms of margin. So it's not a very good sight for IT stocks in the coming future.
Vineet, but my follow-up question on that is, if someone holds IT stocks right now, would the strategy be to sell and exit, book your profits, or just hold and wait and watch?
So I would clearly ask you to sell, because there are so many other sectors which are performing so well. They've got very, very strong. So my advice would be to use any rallies to switch out of IT and get into the domestic themes.
All right.
And electrification is a very strong thing to play.
Okay, all right. Vineet and Rajesh, please, both of you stay with us. We stay for a short break here. More to come when we come back from the break. Welcome back. You're watching Your Trades, and now time for Rajesh to tell us a few of our recommendations. Rajesh, you have a valid point, because we know there is a chance for pullback, because the key support levels for Bank Nifty, and in fact Nifty also managed to close above 20 DMA. The whole week we saw mid-cap at least holding on to its ground of about 0.5% of the green. Now, what would you recommend? Which stocks will make it to your radar? Do they have to be from broader mid-cap and small-cap space, or do you see opportunities from large-cap also?
So it's a mixed bag kind of stock ideas for the coming week. First one is from mid cap, that is Orient Electric. Whole sector tailwind is working here, and looking at the structure for Orient Electric now, stock managed to hold about 20-day, 50-day moving average. The way stock has moved up in last couple of week, we believe that this traction can continue further. 255 to 260 could be the possible target in short period of time. So Orient Electric is buy with stop loss of 21 or 220. The second stock is again Piramal Enterprises. Uh, this is the second consecutive week where the stock is forming higher high-low formation. Stock is now very much very well holding about to its near-term, short-term moving averages. The way stock has recovered and managed to give breakout of last few week consolidation range, that clearly shows that and long built up is already there in derivative data also for today's session. So we expect this momentum can extend further. 985, 990 could be the possible target. One can buy Piramal Enterprises with stop loss of 945. And the third stock is from oil marketing company. Most of the oil marketing companies are doing good. HPCL is looking promising. The way stock managed to give breakout of 5-week consolidation range, clearly series on series, if we compare the open interest, it's a long built up setup for BPCL as well as for the HPCL. So we like HPCL at this moment, and we believe that HPCL can extend its gain towards 555, 565. So one can buy this stock with stop loss of 526.
All right, Rajesh, thanks so much for sharing your picks with our viewers. Vineet, let me come to you for one last question of the day then. And while Rajesh has helped us with specific stock picks, could you help us with the key levels to watch out for when it comes to Nifty and Nifty Bank over the course of next week? What would your resistance and support levels be?
I don't track the markets on the technical
All right.
aspects,
All right.
but I do believe that if you were to, my conjecture is that we will be range bound, primarily because the market is not going to take cues now, since only we are 1 month away from the election D date, and we will continue to be range bound unless there is clear cut expectations are resolved in terms of how the present incumbent fares. It is important that for this market rally to sustain,
Right, right.
that the BJP come with a very strong majority, because the market is already factoring in that, and if you see, valuations are very, very expensive.
All right, well, thanks so much for your views coming in, gentlemen, Rajesh as well as Vineet. Thanks for taking the time out and joining us. With that, we'll let you go. Let's keep it going with the show, and here's some expert voices and some managements that we managed to talk to, the likes of Fiat, Coforge as well as Blue Star, hear out what they had to say in respect to their outlook going forward. Listen in.
Passenger car tires have had a bull run in the OEM, so the replacement demand will show up in passenger car tire. Quarter 1 is an election quarter and summer. So on both counts, we expect passenger demand to be high as well, in high single digits in terms of volume growth. The overall economy is doing well, so replacement demand for truck tires in summer months, again, it's a season for truck tires. So we expect this demand also to be somewhere around middle single digits. So I am quite positive about quarter 1, and over the year 2, the replacement demand should be good. We expect the saliency of export to improve by about 2 percentage point at least in the FY25.
It will be EPS accretive from day one and therefore year one. We believe that the merger synergies, and both teams have spent significant time through the due diligence process to think through that, will allow us to materially enhance the Cigniti EBITDA as well. We believe year one itself, which is FY25 from our vantage, post-merger, Cigniti EBITDA also should start getting fairly close to the Coforge operating EBITDA.
So we should really look at January to June as a overall market growth. I think it should be around 30 to 35%. I think looking forward, like I said, the industry should grow at about 30%. We're, as usual, expecting to grow a little faster than that.
All right, with that's all in this edition of Weekly Special on Your Trades. Thanks so much for watching. Next week again, we have a lot of headlines coming in from earnings, but thankfully there's not any stipulated macro cues, I think. There's just the UK data which has to come.
UK data also, well, yes, that's an important one to watch out for. Macro indicators coming in from Asian markets as well next week, but, well, yes, we'll see you.
The action lies with domestic market only.
Well, broadly, yes. So we'll just have to wait and watch how our market performs. But viewers, with that, we'll bid you goodbye. We'll see you on Monday.
If you like this video, then like, share and subscribe to ET Now.